Hi guys. Today we will analyze Ecolab stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock's overall performance in the market is below average. The short-term trend is positive, while the long-term trend is still negative. It is advised to wait a little bit longer to see how this turns out. Strong support levels are around $162 and $155. Next strong support levels are around $147 and $140. Strong resistance levels are around $169 and $183. Next strong resistance levels are around $193 and $202. In the last month the stock has been trading between $151 and $166 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 1.3 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since January 2022. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 0% per year, for last 5 years. We see that the average profit margin of the stock has been around 10% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 117% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Ecolab Company: bad, average, and good. First scenario. Ecolab will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 6%. Future profit margin would be a low, 8%. Future free cash flow to net income rate would be a low, 80%. In this case, the fair value of the stock today would be $70. Second scenario. Ecolab will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 7%. Future profit margin would be average, 9%. Future free cash flow to net income rate would be average, 90%. In this case, the fair value of the stock today would be $91. Third scenario. Ecolab will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 8%. Future profit margin would be high, 10%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $115. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 3.83. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Ecolab, analysts forecast growth rate around 8% per year in next 5 years, and future P/E around 34. Again, I will use 3 different scenarios for Ecolab Company: bad, average, and good. First scenario. Ecolab will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 6%. Future P/E would be a low, 18. In this case, the fair value of the stock today would be $49. Second scenario. Ecolab will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 7%. Future PE would be average, 21. In this case, the fair value of the stock today would be $63. Third scenario. Ecolab will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 8%. Future PE would be high, 24. In this case, the fair value of the stock today would be $78. As you can see, today the stock is overvalued, $165, even if we expect the company's high performance in future. While the company has an average profitability rating, there are some concerns on its financial health. Also, the stock is expected to show a small growth in revenue in the next 5 years, 6 to 8% yearly. Based on that, the stock looks overpriced at the moment. The stock has been in a downward trend since January 2022, and it can go lower, before it recovers. The stock is a dividend aristocrat. I may consider buying the stock for the dividend, when the stock drops below $115. Company's strengths. Ecolab is an American corporation. It's a provider of water, hygiene, and energy technology and services. The company delivers comprehensive solutions to promote safe food, maintain clean environments, optimize water and energy use, and improve operational efficiency for customers in the food, healthcare, energy, hospitality and industrial sectors. On the other side of the pandemic, Ecolab's water treatment, sanitation and healthcare cleaning services are expected to be in strong demand. The company continues to tweak its portfolio of businesses to optimize growth, and management has divested a lower margin segment, which should boost profitability in 2022-2023. Ecolab's focus on delivering savings on labor, energy and water for customers, makes the firm's products and services attractive even during economic slowdowns. Rising freshwater costs will drive demand for industrial water management systems. Ecolab's water management systems will be able to save its customers water and energy costs, which will increase water business profits. Ecolab is a dividend aristocrat. It has raised its dividend for impressive 30 consecutive years. The stock currently has 1.24% dividend yield. The company's return on equity of 16%, return on assets of 5% and profit margin of 8% are in line with the rest of the industry. Risks. Investors in Ecolab face risks, including the risk that management will not be able to profitably integrate acquired companies. The company's businesses are cyclical, and may rise and fall with global economic trends. Ecolab generates approximately 48% of revenue overseas, and its results are sensitive to trends in the dollar. Sales growth could become more difficult, as Ecolab already sells to many of the largest restaurant and hotel chains. As with many chemical companies, Ecolab's fluctuating raw material costs could weigh on the company's profitability. Ecolab's main customers in the institutional segment are affected by changes in dining and travel activities. The pandemic could permanently alter long-term demand for leisure or business travel, hurting Ecolab's institutional sales growth. If freshwater costs stop rising, demand growth for water management systems from Ecolab's industrial customers would likely slow. Ecolab's cleaning products contain chemicals that are subject to heavy regulation, and may be banned in the future. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 6 to 8% on average per year. The earnings per share is expected to grow by 10 to 12% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.